where to go next. The $4,000 level has been left in the dust, and it looks to me like a market that is going to remain very much buy on the dip. Shorter term charts show that there are multitudes of support levels at 4,080, 4,050, and then again at 4,020. Obviously, the 4,000 level will attract a lot of attention as well. Silver has broken higher again in the spot market. It is worth noting that the spot market and the futures markets are two different worlds right now, and you need to be cautious with this, mainly due to the fact that we are now looking at what is known as backwardation. And the secret is that the US dollar is refusing to roll over and play dead, despite the fact that everybody seems to think that it's going to zero at the moment. This is kind of what I'm worried about in the silver market, because if the US dollar jumps suddenly, silver could find itself in a world of hurt. Markets recover after calming of tensions. This is Chris from Hola Prime, taking a look at your technical analysis roundup. The gold market is where I'm starting, and you can see that gold has in fact been very strong yet again during the day on Monday, as we are just killing time at the moment, trying to sort out where to go next. The $4,000 level has been left in the dust, and it looks to me like a market that is going to remain very much buy on the dip. Shorter term charts show that there are multitudes of support levels at 4,080, 4,050, and then again at 4,020. Obviously, the 4,000 level will attract a lot of attention as well. What I am concerned about is that we are a little bit overdone, and one would have to think that the upside eventually, despite the fact that it's the right way to play the market, probably runs into a bit of exhaustion. Exhaustion wouldn't necessarily be the most surprising thing here in a market that over the last couple of months has basically risen about 30%. That's not normal for gold. Silver has broken higher again in the spot market. It is worth noting that the spot market and the futures markets are two different worlds right now, and you need to be cautious with this, mainly due to the fact that we are now looking at what is known as backwardation. And backwardation is when the price in the future is much lower than the price right now in spot. And it is lower. Now, the futures contract is rising in silver, but I do think we've got a scenario where sooner or later something bad's going to happen. I'm very, very cautious with silver. I feel much better about buying gold, quite frankly. Despite the fact that it's only moved higher by a little over 2%, and silver, of course, is up by 3.25% at the moment. I think this is a situation where when this does end, it ends very poorly. Silver has a long history of being a great place to blow your account up. So by all means, if you are going to be involved, look for dips that offer value and make sure your position size is reasonable. The euro continues to show overall malaise against the US dollar, and I think this is telling us a little bit of a secret here. And the secret is that the US dollar is refusing to roll over and play dead, despite the fact that everybody seems to think that it's going to zero at the moment. This is kind of what I'm worried about in the silver market, because if the US dollar jumps suddenly, silver could find itself in a world of hurt. While the FOMC interest rate decision was to cut, and the press conference sounded somewhat dovish, kind of, the reality is price is doing exactly the opposite of what most pundits are out there pushing at the moment. Sooner or later, you just have to realize that the price is really what matters. And that's what I'm looking at right here. If we break down below the 1.1540 level, I think it opens up a move down to the 1.4 level. Rallies at this point, I don't trust. I think there's selling opportunities on signs of exhaustion. The British pound has tried to rally a little bit during the trading session on Monday after the relief that traders are finding in the market at the moment due to the ratcheting down of tension between the United States and China. But at this point, we are struggling to maintain those gains, and this tells me the market really isn't convinced that the death of the dollar is near. Now, having said that, the British pound has outperformed other currencies against the US dollar over the last year and a half or so. And as a result, if I'm looking to buy the dollar, I'm not necessarily looking to short this pair, but I do use it as a barometer. If it starts to fall apart, that means other currencies like the euro and the Canadian dollar, the Japanese yen, they're all going to be absolutely hammered. So this is a tool for me. This is an indicator. If you really want to buy or sell this pair, a move to the 50-day EMA that shows signs of exhaustion near 1.3450 might be an interesting shorting opportunity. But really, I just use it to determine the overall direction of the US dollar. Again, if the British pound struggles against the US dollar, some of these other weaker currencies are going to get just absolutely battered. The US dollar initially pulled back just a bit during the trading session on Monday, but you can see that we have bounced from the previous uptrend or downtrend line to show signs of life, and we are above the 0.80 level. The 0.81 level above is a large round psychologically significant figure that I think eventually will open up the possibility of a move to the 0.82 level. All things being equal, you should also keep an eye on the 50-day EMA sitting right around the 0.80 level. The market looks to me like it's in the midst of trying to form some type of bottoming pattern, and that normally takes time. Keep in mind that the Swiss franc is a safety currency right along with the US dollar, so it'll be interesting to see how this behaves. If we get a sudden risk-off move, this might be one of the few places where the US dollar really starts to shrink. On the other hand, if we get a decidedly pro-US dollar move, then this will be just yet another market where we strengthen. Be cautious. Understand that this is a slow-moving market, but ultimately this is a scenario where we are trying to find the bottom. The US dollar gapped higher to kick off the trading session on Monday after that good news coming from both the United States and China. And then we dropped a bit to fill that gap, only to turn around and show buyers yet again. The market showing buyers jumping into the market opens up the possibility of a move to the 153 yen level. Breaking above the 153 yen level opens up the possibility of a much bigger move, perhaps to the 158 yen level before it's all said and done. The 151 yen level is an area that previously had been resistance, so now it should be support. That's exactly how it's behaved. That being said, there is a gap near the 50-day EMA that I think comes into the picture. But really, this is a pair that I've been bullish on for several months now, despite the fact that we went sideways for a while, because you get paid to hang on to it at the end of the day. Therefore, you're building up and padding a position for quite some time. All things being equal, there's nothing on this chart that even remotely suggests that we are going to have issues rallying. And in this environment, I think it makes perfect sense because the US dollar has rallied against everything else. And of course, the fact that the Japanese yen is moving based on perceived dovishness coming down the road by the Japanese government with the recent election. That is literally what caused this gap higher. But when you look at the action over the last several months, the dollar has just refused to roll over against the yen, just like the euro. So I think this was basically the excuse for this pair to break out. The US dollar has rallied against the Canadian dollar again to find itself near the 1.4030 level and is on the verge of a breakout. Ultimately, I think this market probably goes looking to the 1.4250 level above, which is the top of this big candlestick here. Back on the 9th of April. So I do think it makes a certain amount of sense to be buying dips in this pair. The interest rate differential most certainly favors the United States, and of course Canada is a bit of a basket case at the moment. Not to mention the fact that Canada also has to deal with the idea that it's in the middle of a trade war with 25% of its GDP. The 25% of its GDP is known as the United States. And although there are agreements in place for a lot of different goods and services that are dealt between the two countries, there is still a spat. And one has to wonder sooner or later how long that lasts, because while the United States is basically fighting everybody via tariffs at one point or another, it's Canada that's dug in and really decided to test whether or not the Canadian dollar becomes the world's reserve currency or the US dollar stays. In this ridiculously unbalanced fight, it does make sense that Canada, with only 7% of the United States economy, probably loses. So I think given enough time, we'll just see a continuation of this bottoming pattern. And I look at each pullback as a buying opportunity to collect swap and to build to an already long position. The Australian dollar has been all over the place during the session on Monday, but we are basically hanging around the 200-day EMA. The 200-day EMA, of course, is a long-term indicator for trend, and it does attract a certain amount of attention. The 0.6550 level ends up being a bit of a magnet for price, as you can see multiple times in the past. The 50-day EMA is an indicator that people will be watching, and it's right there as well. So I think it's a situation where we're just bouncing around back and forth. The Aussie dollar is highly levered to China and, of course, highly levered to global trade. So expect this one to move based on the latest headlines. Quite frankly, its neutral demeanor and its lack of momentum, even when the US dollar was falling apart, tells me this is not a currency that you really want to waste a bunch of time and money on. It is expected to see a little bit of loosening of monetary policy down the road, right along with New Zealand, who we'll look at next. So I think the antipodes continue to suffer at the hands of the US dollar. The New Zealand dollar is sideways at the moment for the session. It does look like it's probably trying to bounce, but I think that bounce gets sold into yet again as market participants just don't really look at this through the prism of a market that is likely to just shoot straight up in the air. That being said, we may get a little bit of a bounce from here just due to the longer term grinding, but I think any signs of exhaustion probably get sold into. And the relief rally probably has more to do with the US China announcement. And in fact, when I look at the hourly chart, you can see we've gone nowhere all day. So this is still a very heavy looking chart. The euro continues to struggle at the hands of the British pound, as anytime it rallies, it gives up gains. By doing so, the market looks very sideways and noisy. And with that being the case, the market is right there at the 50-day EMA, which of course is an indicator that a lot of people pay close attention to. The 50-day EMA is a common indicator for people to try to determine where the direction is going, with the 0.8750 level above being resistance and the 0.86 level being support. All things being equal, this is a market that I think probably stays somewhat neutral. And with that being the case, and the fact that we are right in the middle of the overall range, this is a market that is going nowhere. That being said, you can see that we've had three bullish moves to the 0.8750 level. But we also have divergence with the moving average convergence divergence indicator. So I do favor shorting this market because, quite frankly, it just cannot handle any upward momentum. With this being the case, I think you have to look at this as a situation where we will continue to see a lot of noisy behavior, but we just can't seem to hang on to gains. And that is the biggest hint here. The euro initially fell against the Swiss franc during the trading session on Monday. testing the 0.9250 level, an area that, of course, is previous support. And with that being the case, I think you have to look at this as a market that will more likely than not continue to be noisy. But I also recognize that we are in the midst of a consolidation range, with the 0.9250 level being a bit of a floor. If we do rally from here, the 50-day EMA and then the 200-day EMA indicators both offer resistance. Anything above there opens up the possibility of the 0.9450 level, but really, I don't think we go any further than that. Keep in mind that the pair does tend to be very sensitive to risk appetite, rising with risk appetite increasing. So you can see that maybe Monday, this was a little bit of a celebration for the calming of tensions between the United States and China. So it does make sense we would bounce a little bit, but all things being equal, this is a market that I think is just hanging out in the same area. Looking at the euro against the yen, you can see that we remain very noisy, going back and forth during the trading session on Monday. At this point, we will be looking at the gap underneath as a potential support level that people will be watching, with the 50-day EMA at the bottom of that gap, adding even more credence to the 173 yen level being support. I'm looking for some type of pullback and a bounce to take advantage of, but it's possible that we don't even fill the gap. We may have just tested the top of it and left it at that. The Japanese yen is not a currency that I want to own. And I think this is a situation where the interest rate differential and, quite frankly, the loose monetary policy coming out of Tokyo continues to work against the yen. The British pound has skyrocketed against the Swiss franc during the trading session on Monday, using the 1.0650 level as a floor in the market. And now it looks like we might challenge the 50-day EMA, which is currently right around the 1.0775 level and dropping. Anything above there opens up the possibility of a move to the 1.0850 level. The 200-day EMA is at the 1.0950 level and dropping, but I think at this point what we are seeing is either a descending triangle that suggests absolute doom in this pair, or we are in the midst of trying to form some type of bottoming pattern or flat support range between the 1.0650 level and the 1.06 level. Ultimately, you get paid to hang on to the British pound against the Swiss franc at the end of each day. So it is only a matter of time before market participants will jump into this and try to take advantage of that from what I see. The British pound gapped higher against the Japanese yen during the trading session on Monday and has started to grind higher. Ultimately, this is a market that I do think goes higher over the longer term. But there's a huge gap underneath that continues to be a major problem. And with that being said, the 50-day EMA is an indicator that you'll be watching very closely as it comes to the 200-day yen level. All things being equal, this is a market that will continue to look at the 205 yen level as important. So it'll be interesting to see how that plays out. I think over the longer term, it is going to be a scenario where the interest rate differential continues to favor the British pound. And of course, we could just continue to see the Japanese yen shrink overall. Quite frankly, the Japanese yen is one of the least favorable currencies for me right now in the Forex world. The Canadian dollar continues to be very noisy against the Swiss franc as we are bouncing around the 0.57 level, which is a large round psychologically significant figure and an area where there is a lot of support in the short term. Ultimately, this is a market that I think will continue to be noisy, but pay attention to where we are because it has offered support for several weeks. So if we can bounce, that would be a good sign for this pair. Although the Canadian dollar is one of the least desirable currencies out there, right along with the Japanese yen. So if I'm going to go against the value of the Swiss franc in general, I'm probably going to pick something a little bit more appetizing, like the British pound or even the US dollar. The Canadian dollar, I think, just has far too many issues ahead of it, not the least of which will be an oil market that's not that vibrant. Furthermore, it's likely that the Bank of Canada will have to do some type of quantitative easing, and that will work against the overall value of the loonie. Speaking of the Canadian dollar, we have bounced a bit against the Japanese yen, with this market basically following the yen and not the Canadian dollar at the end of the day. The Canadian dollar is pretty weak, but the Japanese yen is weaker. So it does make sense that this will drift higher. But my question to you would be, why buy the Canadian dollar when you can buy the US dollar or the British pound against the Canadian or against the Japanese yen? So really this comes down to the fact that the yen is so weak that we will probably continue to drift higher. Remember, interest rate differential does favor Canada, but it's not as wide as it is in other places. And that's something that does matter over the longer term. You will get better returns out of pound yen than you will Canadian dollar yen if we do, in fact, continue the overall uptrend and see this market take off to the upside. The euro has been very noisy against the Norwegian kroner during the trading session here on Monday, which makes a fair bit of sense because the market is basically on fire at the moment. We're still trying to figure out what we are going to try to sort out whether or not the risk appetite gets to be a bit too destroyed. Now, this is a pair that for some time now has looked at the 11.75 level as both support and resistance, and it is an area that a lot of people will be watching. We did pierce the 200-day EMA, but we could not hang on to those gains. So with this, I believe the market is going to continue to attempt to break above the 11.75 level. But quite frankly, I just don't think it has the momentum. If it did break above there, then watch 11.85, where there is some selling. On the downside, the 11.55 level looks to be support. I think we remain very range bound here in this pair. As you can see, the spread, it's a little bit restrictive in this range here, but it's something that you can work with if you look on the edges to try to take advantage of this sideways action. The euro rallied against the Swedish krona during the session on Monday, but gave back gains above the crucial 50-day EMA. The 50-day EMA, of course, is an indicator that a lot of people will be watching closely, and therefore it is worth noting that market participants will continue to look at that area up to the 11.08 level as a bit of a barrier that's going to be difficult to overcome. If we did, that would be a very pro-euro signal. Think ultimately we stay in the range between the 11.08 level and the 11.85 level. The New Zealand dollar has gapped higher to kick off the trading session on Monday, but then pulled back to turn things around and bounce. The market is hanging around the 200-day EMA, which of course is an indicator that continues to be followed very closely by the market. And I think all things being equal, this is a market that I think probably drifts higher. But we have a situation where the Japanese yen itself is so weak that even the lowly New Zealand dollar probably does fairly well here. On a move to the upside, could open up the possibility of the New Zealand dollar trying to get to the 89 yen level. If we break down below the 86.40 yen level, then we could go down to the 85 yen level. Ultimately, this is a market that is going to be very noisy and sideways overall, but right now, I think we're basically in the middle of a consolidation area. All things being equal, this is a market that I think buyers continue to come back to, not because of the Kiwi, but because of the weakness of the yen. Interestingly enough, the Swiss franc has lost a bit of ground against the New Zealand dollar, despite the fact that the New Zealand dollar is so lackluster. This is a purely risk on trade because the New Zealand dollar is a commodity currency, and that is, of course, a situation where you need risk appetite to pick up in order for it to strengthen. The Swiss franc, of course, is a safety currency that you need to be paying close attention to because ultimately this is a market that I think probably continues to be um, looking to that risk off type of move. And if we were to break down below the 0.4550 level, that shows just how much ugliness there is out there in the Forex world. With that being said, I think you've got a situation that traders will continue to see a lot of sell the rallies type of situation. But if it doesn't end up being that way, then what you've got is a situation where you're probably better off shorting the Swiss franc against other currencies such as the United States dollar, British pound, etc. So, with that being said, I think we do get a little bit of a turnaround here. We'll just have to wait and see if it continues. If it does, I'll be buying those other currencies, not necessarily the New Zealand dollar. The US dollar has broken to the upside to test the 18.50 level, which also is right here at the 50-day EMA. This is a market that I think, given enough time, is going to have to deal with this level, but so far it seems to be offering significant resistance. The market gapped lower in a risk on type of situation as the US starting to cool tensions with the Chinese leads to more risk on behavior. And therefore, it's thought that the US economy will continue to buy a lot of Mexican goods. So you continue to see sellers here. The interest rate differentials favor shorting this pair, and I think we just continue in the same range between 18.2 and 18.5 with a downward bias. Crude oil did rally a bit during the trading session here on Monday, gapping higher, trying to reach the $60 level, but has failed there. It's not a huge surprise to me because there is a huge zone of noise between $60 and $62 that has been important for a while. I think you have to look at this as a market that basically, I think, ended up trying to find its way back above this support region. But I also believe that you have a scenario where it's just too much. It's just too strong for the market to break out above. If we could break out above the $62 level, that would be a huge sign. But as things stand right now, I think we're still somewhat stuck. And if that's going to be the case, then short-term rallies almost certainly get sold into, as we probably stay somewhat range-bound in a depressed manner. The Nasdaq 100 has absolutely launched during the trading session with the calming down of tensions, and as I record this, it's up about 3.15%, gapping higher, pulling back slightly, and then just taking off. The 25,000 level, of course, is going to continue to attract attention. Let's see if we can get a day or two of upward momentum, because if we can, we could really be on to something. Unfortunately, though, a lot of this is going to come down to risk appetite and, of course, how things play out in the China thing. At this juncture, I have no interest in shorting this market, and I do think that given enough time, traders will continue to look at this as a very bullish market. The Dow Jones 30 has gapped higher and launched above the 50-day EMA as well. I think this is a market that continues to see plenty of buyers, and therefore I don't have any interest whatsoever in shorting. 45,000 has been important. And I think we have to continue to look at it. So, with this being the case, I believe this is a market that is buy on the dip and will remain so as things stand. 45,000, of course, is a large round psychologically significant figure, and it's probably worth paying attention to the fact that the 50-day EMA is sitting below. That should attract a certain amount of attention. Bitcoin is fairly stable on Monday after a really good Sunday, as traders have somewhat stabilized the market. And that is the most important thing in the short term. You need to pay attention to the markets and whether or not they can stabilize. That is the beginning of recovery. I don't know that I'm willing to throw a ton of money into Bitcoin, but it's at least making moves in the right direction. And finally, the US dollar has rallied a little bit against the Chinese yuan or the Chinese renminbi, but has given back those gains. And it looks to me like we're just going to continue to drift a little bit lower. That, of course, is more of a risk on type of move with the Chinese currency picking up a little bit of momentum. That does at least suggest that traders are a little bit more optimistic about the global economy. For what it's worth, we did not get a massive move during those trade tension flare ups.
Hola Prime, trade with transparency.